Question 1. Which of the following factors most significantly influences the premiums for disability insurance? A. The type of disability benefits provided. B. The insured person's occupation classification. C. The medical history of the insured. D. The length of the waiting period. Answer: B. The insured person's occupation classification. Explanation: occupation classification is one of the key factors in determining the cost of disability insurance premiums. Insurers assess the level of risk associated with different occupations. Jobs that are physically demanding or hazardous, e.g., construction workers, are considered high risk, and therefore their premiums tend to be higher compared to less risky professions, e.g., office workers. Medical history, benefit types, and waiting periods may influence the policy, but occupation classification has the most direct impact on premiums. Question 2, scenario-based. Mr. Thomas is a self-employed consultant who has a disability insurance policy that covers him for total disability but not partial disability. One morning he experiences severe back pain that prevents him from working for several weeks, but he is still able to complete some light administrative tasks. What action should Mr. Thomas take regarding his disability insurance policy? A. He should file a claim for partial disability as he is unable to work full-time. B. He should file a claim for total disability as he is unable to perform all of his work duties. C. He should not file a claim because he is still able to perform some light work. D. He should consult his insurance provider to determine if he qualifies for partial disability. Answer: D. He should consult his insurance provider to determine if he qualifies for partial disability. Explanation: Mr. Thomas' policy covers total disability but not partial disability, meaning he can only claim benefits if he is completely unable to work due to his condition. However, in many cases, insurers will assess the specific circumstances, including the degree of impairment. Since Mr. Thomas is still able to perform some tasks, he should consult with his insurer to clarify whether his situation may qualify for partial disability under the terms of his policy or whether a different type of coverage is available for partial disabilities. Question 3. Which of the following exclusions would likely prevent a disability insurance claim from being paid out under a typical disability policy? A. Disability resulting from a motor vehicle accident while commuting to work. B. Disability due to a pre-existing condition not disclosed at the time of application. C. Disability caused by a fall while participating in a recreational activity outside of work hours. D. Disability caused by a mental health condition under a policy with specific mental health exclusions. Answer: B. Disability due to a pre-existing condition not disclosed at the time of application. Explanation: most disability insurance policies include exclusions for pre-existing conditions, especially if these conditions were not disclosed at the time of application. If an individual is diagnosed with or has a condition that existed before the policy's inception and does not inform the insurer, a claim related to that condition may be denied. While some policies may have specific exclusions for certain activities like recreational activities or mental health conditions, the failure to disclose a pre-existing condition is one of the most common reasons for a claim denial in disability insurance. Question 4. What is the primary difference between short-term and long-term disability insurance? A. Short-term disability insurance typically covers disabilities lasting more than 12 months, while long-term covers those lasting less than 12 months. B. Short-term disability insurance usually has a low benefit amount and shorter waiting period compared to long-term disability insurance. C. Long-term disability insurance provides coverage only for permanent disabilities, while short-term covers both temporary and permanent disabilities. D. Long-term disability insurance is more commonly provided by the government, while short-term disability insurance is offered by private insurers. Answer: B. Short-term disability insurance usually has a lower benefit amount and shorter waiting period compared to long-term disability insurance. Explanation: the primary difference between short-term and long-term disability insurance lies in the duration of coverage, the benefit amounts, and the waiting periods. Short-term disability typically provides benefits for a few weeks to a few months and has a shorter waiting elimination period, while long-term disability covers extended periods, typically over 1 year, and often comes with a longer elimination period. Short-term policies generally have lower benefit amounts due to the shorter duration of coverage. Question 5. Which of the following is an example of a policy rider that enhances the benefits of a disability insurance policy? A. Waiver of premium rider. B. Short-term disability rider. C. Incontestability rider. D. Tax-free benefits rider. Answer A. Waiver of premium rider. Explanation. The waiver of premium rider is an example of a rider that can enhance a disability insurance policy. It allows the policyholder to stop paying premiums if they become disabled and are unable to work. The policy stays in force even though premiums are waived during the disability period. Other riders like the incontestability rider relate to policy provisions that limit the insurer's ability to contest claims, but they do not directly enhance disability benefits in the same way the waiver of premium rider does. Question 6. Scenario-based. MS Jackson works as a graphic designer and has purchased a long-term disability insurance policy. She experiences chronic back pain that prevents her from performing the physical aspects of her job, such as sitting for long hours at the computer. However, she is still able to manage her tasks by working shorter hours and delegating the physical tasks. Based on her situation, what type of disability claim should MS Jackson file? A claim for partial disability, as she can no longer perform her job fully. B. A claim for total disability, as her chronic back pain has impacted her work. C. A claim for temporary disability, as her condition is not permanent. D. MS Jackson should not file any claim because she is still able to work in some capacity. Answer A. A claim for partial disability, as she can no longer perform her job fully. Explanation. Since MS Jackson is still able to perform her duties, albeit with modifications such as working shorter hours and delegating tasks, she should file a claim for partial disability. Partial disability benefits typically apply when an individual can still work but is unable to perform all aspects of their job or work at full capacity. The policy would likely cover a portion of her income reflecting the loss of earning capacity due to her disability. Question 7. Which of the following is a common exclusion in most disability insurance policies? A. Disability due to natural disasters like earthquakes or floods. B. Disability caused by self-inflicted injuries. C. Disability resulting from a workplace accident covered by workers' compensation. D. Disability caused by a car accident on the way to work. Answer B. Disability caused by self-inflicted injuries. Explanation. Most disability insurance policies explicitly exclude coverage for disabilities resulting from self-inflicted injuries, including suicide attempts or injuries caused by intentional acts. This exclusion is designed to prevent individuals from claiming benefits due to actions they take to harm themselves. However, injuries from accidents, such as a car accident on the way to work, or those covered by workers' compensation, may not be excluded, and some policies may cover disabilities caused by natural disasters or workplace accidents. Question 8. What is the primary purpose of the elimination period in a disability insurance policy? A. To determine the length of time a policyholder must wait to qualify for disability benefits. B. To exclude pre-existing conditions from coverage. C. To calculate the total disability benefits payout. D. To set the maximum amount of benefits payable to the insured. Answer A. To determine the length of time a policyholder must wait to qualify for disability benefits. The explanation. The elimination period is the waiting period between the onset of disability and the beginning of benefit payments. It is essentially the deductible period during which the insured must wait before receiving disability benefits. The length of the elimination period varies by policy, and it typically ranges from a few weeks to several months. The elimination period is important because it affects both the cost of the premiums and the insured's ability to start receiving benefits. Question 9. Which of the following terms refers to the maximum amount of benefits a policyholder can receive from a disability insurance policy? A. Monthly benefit limit. B. Benefit period. C. Waiting period. D. Elimination period. Answer A. Monthly benefit limit. Explanation. The monthly benefit limit is the maximum amount of money that a policyholder can receive each month in disability benefits. It is typically based on a percentage of the policyholder's pre-disability income, with many policies offering between 50% to 70% of income. The benefit period refers to the length of time benefits are paid, and the waiting period or elimination period refers to the time before benefits kick in after a disability occurs. Question 10. In Alabama, which of the following is true regarding the state's regulations on disability insurance? A. Alabama has a state-run disability insurance program that provides coverage for all workers. B. Disability insurance in Alabama is entirely regulated by federal law and does not have any state-specific provisions. C. The Alabama Department of Insurance oversees consumer protection in disability insurance policies. D. Disability insurance policies in Alabama must cover all disabilities, including mental health conditions, without exclusions. Answer C. The Alabama Department of Insurance oversees consumer protection in disability insurance policies. Explanation: in Alabama, the Department of Insurance regulates the state's insurance industry, including disability insurance. The department plays a key role in consumer protection, ensuring that insurance policies comply with state laws and that insurers treat policyholders fairly. While Alabama does not have a state-run disability insurance program, federal regulations such as the RISA, Employee Retirement Income Security Act, do apply to certain policies, but state-specific rules still govern how insurers operate within Alabama. Question 11. Which of the following is the most likely consequence of a disability insurance policy's loan occupation definition of disability? A. The policyholder will be paid benefits if they are unable to perform their specific job duties, but they may still work in another occupation. B. The policyholder will not be paid benefits if they can perform any job regardless of the occupation. C. The policyholder will be paid benefits only if they are unable to perform any job, including administrative tasks. D. The policyholder will be paid benefits regardless of whether they can still perform their job duties. Answer A. The policyholder will be paid benefits if they are unable to perform their specific job duties, but they may still work in another occupation. Explanation: the own occupation definition of disability allows policyholders to receive benefits if they are unable to perform the substantial duties of their own occupation due to illness or injury. This is a more favorable definition for insured individuals, as it provides benefits even if they are capable of working in a different occupation. In contrast, then any occupation definition requires that the individual be unable to perform any work for which they are reasonably suited by education, training, or experience. Question 12. Which of the following is typically a key factor used in the underwriting process of disability insurance? A. The applicant's credit score. B. The applicant's employment history. C. The applicant's occupation and income. D. The applicant's marital status. Answer C. The applicant's occupation and income. Explanation: in disability insurance underwriting, the applicant's occupation and income are significant factors in determining eligibility and premiums. Occupation is important because some jobs are riskier than others, e.g., manual laborers may be more likely to file claims, which influences premiums. Income affects the benefit level, as policies often replace a portion of the insured's income, typically 50%, 70%. Other factors like credit score or marital status are not typically considered as primary underwriting criteria for disability insurance. Question 13. Scenario-based. Mr. Taylor works as a construction foreman and has long-term disability insurance, and after an on-the-job accident he sustains a back injury that limits his ability to lift heavy objects, but he can still perform office-based tasks. His physician has certified that he is totally disabled from his prior occupation but can still work in a modified role. What type of disability benefits should Mr. Taylor apply for? A. Total disability benefits for being unable to perform any job. B. Partial disability benefits due to the limitation in his work capacity. C. Benefits for workers' compensation instead of disability insurance. D. No benefits are available because he can still work in a modified role. Answer B. Partial disability benefits due to the limitation in his work capacity. Explanation: Mr. Taylor should apply for partial disability benefits because he is unable to perform the substantial duties of his prior occupation, construction foreman, but he can still work in a modified role, such as in an office. Partial disability benefits are meant to replace a portion of the income loss resulting from the inability to perform one's primary job, but the policyholder can still earn income in another capacity. Question 14. Which of the following statements is true regarding the relationship between disability insurance and workers' compensation? A. Workers' compensation and disability insurance are mutually exclusive, and one cannot claim both. B. Disability insurance benefits are paid in full regardless of any workers' compensation benefits the claimant may receive. C. Workers' compensation is the primary form of disability coverage, and disability insurance benefits are typically reduced by the amount of workers' compensation received. D. Disability insurance completely replaces any workers' compensation benefits without reduction. Answer C. Workers' compensation is the primary form of disability coverage, and disability insurance benefits are typically reduced by the amount of workers' compensation received. Explanation: when an individual is eligible for both workers' compensation and disability insurance, the disability insurance benefits are often coordinated with workers' compensation. Disability policies usually reduce their payout by the amount the claimant receives from workers' compensation. This prevents the policyholder from double dipping and receiving more than 100% of their income replacement. Question 15. What does a disability insurance policy's exclusion for pre-existing conditions typically mean? A policyholder will never be covered for any condition diagnosed before the policy's issuance. B. The insurer will not pay benefits for disabilities arising from conditions diagnosed within a specific period before the policy starts. C. The insurer covers pre-existing conditions after a waiting period regardless of when the condition was diagnosed. D. Pre-existing conditions are covered under all circumstances with no waiting period or exclusions. Question 15. What does a disability insurance policy's exclusion for pre-existing conditions typically mean? A policyholder will never be covered for any condition diagnosed before the policy's issuance. B. The insurer will not pay benefits for disabilities arising from conditions diagnosed within a specific period before the policy starts. C. The insurer covers pre-existing conditions after a waiting period regardless of when the condition was diagnosed. D. Pre-existing conditions are covered under all circumstances with no waiting period or exclusions. Question 16. How do cost of living adjustments, COLA, affect disability insurance benefits? A. COLA increases the benefit amount each year to account for inflation and rising costs of living. B. COLA provides a one-time lump sum payment to the insured after a disability claim is approved. C. COLA reduces the premium cost over time, especially for long-term policies. D. COLA is applied to the waiting period and eliminates it over time. Answer A. COLA increases the benefit amount each year to account for inflation and rising costs of living. Explanation: cost of living adjustments, COLA, are designed to protect the purchasing power of the insured's disability benefits over time. These adjustments increase the benefit amount annually, usually in line with inflation or a predetermined percentage, ensuring that the benefits maintain their value even as the cost of living increases. Question 17. Which of the following would not typically be considered a qualifying disability under most disability insurance policies? A. Disability resulting from a traumatic accident at work. B. Disability caused by chronic mental health conditions such as severe depression. C. Disability caused by self-inflicted injuries from an attempted suicide. D. Disability caused by a long-term illness such as cancer. Answer: C. Disability caused by self-inflicted injuries from an attempted suicide. Explanation: most disability insurance policies exclude coverage for disabilities resulting from self-inflicted injuries or attempted suicide. Such exclusions are in place because insurers do not want to cover risks that individuals voluntarily engage in. Disabilities caused by accidents, chronic illnesses, and mental health conditions, however, are generally covered under standard disability policies subject to the terms and exclusions of the specific policy. Question 18. Which of the following is the most common tax treatment for long-term disability insurance benefits? The benefits are taxable to the insured if the premiums were paid with pre-tax dollars. B. Benefits are always taxable regardless of how the premiums were paid. C. Benefits are not taxable if the policyholder is receiving benefits for less than 12 months. D. Benefits are tax-free as long as the disability is not work-related. Answer A. Benefits are taxable to the insured if the premiums were paid with pre-tax dollars. Explanation: long-term disability insurance benefits are typically taxable if the policyholder paid premiums with pre-tax dollars. If the premiums were paid with after-tax dollars, the benefits are usually tax-free. This is because the tax deduction for premiums reduces the taxable income and the tax is then applied when benefits are received. It's important for policyholders to understand how their premiums were paid to determine whether their benefits will be taxable. Question 19. What is the primary purpose of the elimination period ECA disability insurance policy? A. To ensure the policyholder has sufficient time to recover before applying for benefits. B. To act as a deductible period before benefits become payable, reducing small claims and administrative costs. C. To define the maximum benefit period the policyholder can claim. D. To determine the income replacement ratio for the policyholder. Answer: B. To act as a deductible period before benefits become payable, reducing small claims and administrative costs. Explanation: The elimination period is essentially a waiting period during which no benefits are paid. This period serves as a deductible of sorts, as it ensures that the insurer will only pay for more significant, longer-term disabilities. It helps reduce the number of small claims and helps lower administrative costs for both insurers and policyholders. The length of the elimination period varies, depending on the policy, typically ranging from 30 to 180 days. Question 20. Which of the following is true about disability insurance for self-employed individuals in Alabama? A. Self-employed individuals are automatically covered by the state's disability insurance program. B. Self-employed individuals can purchase private disability insurance policies to protect their income. C. Disability insurance for self-employed individuals is not available in Alabama. D. Self-employed individuals can only access short-term disability coverage. Answer: B. Self-employed individuals can purchase private disability insurance policies to protect their income. Explanation: self-employed individuals are not covered by Alabama's state disability insurance program, as the state does not have a mandatory disability insurance system. However, they can purchase private disability insurance policies to protect their income in the event of illness or injury. These policies are important for self-employed workers, as they do not have access to employer-sponsored disability coverage or social safety nets like workers' compensation. Question 21. Which of the following is an example of an exclusion that may be found in a disability insurance policy? A. Benefits will be paid for injuries sustained during a car accident. B. Benefits will be reduced if the policyholder is receiving workers' compensation benefits. C. Benefits will be denied if the disability is caused by a pre-existing condition. D. Benefits will be paid for disabilities caused by accidental injuries at work. Answer: C. Benefits will be denied if the disability is caused by a pre-existing condition. Explanation: exclusions in disability insurance policies often include pre-existing conditions, which are disabilities or injuries that existed before the policy's issuance. This exclusion is common because insurers want to avoid covering conditions that are already known and could lead to claims shortly after the policy is issued. Other exclusions can include acts of war, self-inflicted injuries, or drug and alcohol abuse. Question 22. Which of the following is typically covered under a short-term disability insurance policy? A. Income replacement for a few weeks to a few months for a temporary disability. B. Long-term income replacement for permanent disabilities. C. Coverage for disabilities that occur while working abroad. D. Only injuries that happen in the workplace. Answer: A. Income replacement for a few weeks to a few months for a temporary disability. Explanation: short-term disability insurance is designed to replace a portion of income for a limited time, usually a few weeks to a few months, when a policyholder is temporarily disabled due to illness or injury. Long-term disability insurance, on the other hand, provides income replacement for extended periods if a disability prevents someone from returning to work. Question 23, scenario-based. Sarah has a long-term disability insurance policy that replaces 60% of her income after a car accident. Sarah is unable to work for 6 months, but her employer provides her with a salary continuation plan that covers 40% of her income. What percentage of her original income will Sarah receive from both sources combined? A. 100% of her income. B. 60% of her income. C. 80% of her income. D. 40% of her income. Answer: A. 100% of her income. Explanation: since Sarah's long-term disability policy pays 60% of her income and her employer's salary continuation plan covers 40%, the two benefits will combine to replace 100% of her income. This is typical when an employer and an insurer both provide coverage, but policies may have coordination clauses that prevent the total income replacement from exceeding 100%. Question 24. What is the primary difference between short-term and long-term disability insurance policies? A. Short-term policies cover only disabilities caused by accidents, while long-term policies cover both accidents and illnesses. B. Short-term policies have longer waiting periods than long-term policies. C. Short-term policies provide benefits for a shorter period, typically ranging from a few weeks to a few months, while long-term policies cover extended disabilities lasting years. D. Long-term policies provide higher benefit amounts than short-term policies. Answer: C. Short-term policies provide benefits for a shorter period, typically ranging from a few weeks to a few months, while long-term policies cover extended disabilities lasting years. Explanation: The key difference between short-term and long-term disability insurance policies is the duration of the coverage. A short-term disability provides benefits for a limited time, often covering a few weeks to a few months, and is designed for temporary disabilities. Long-term disability insurance provides benefits for an extended period, sometimes lasting years or until retirement age in cases of permanent or prolonged disabilities. Question 25. Which of the following is typically a benefit of group disability insurance plans offered by employers? A. Lower premiums compared to individual policies due to the group nature of the coverage. B. Higher benefit amounts than individual disability policies. C. Coverage for disabilities only occurring in the workplace. D. No exclusions for pre-existing conditions. Answer A. Low premiums compared to individual policies due to the group nature of the coverage. Explanation: Group disability insurance plans offered by employers typically have low premiums than individual policies because they are purchased as part of a group, which reduces the risk for the insurer. The benefits of group policies, however, may be limited in comparison to individual policies, such as lower benefit amounts or fewer options for customization. Question 26. Which of the following is most likely to be covered under a disability insurance policy's rehabilitation benefit? A. Payments to help the policyholder return to work after disability. B. Payments to help cover the cost of hospitalization during the disability period. C. Payments to provide a second opinion from a specialist. D. Payments to cover the cost of childcare during the policyholder's recovery. Answer A. Payments to help the policyholder return to work after disability. Explanation: Rehabilitation benefits are designed to support policyholders as they recover and return to work after disability. These benefits may include payment for vocational training, job retraining, or counseling to help the policyholder reintegrate into the workforce. They are a common feature of long-term disability policies to encourage a full recovery and return to productivity. Question 27. Which of the following is the primary purpose of the integration of benefits provision in a disability insurance policy? A. To coordinate disability benefits with other income sources, such as Social Security or workers' compensation. B. To prevent the policyholder from receiving benefits for a disability related to pre-existing conditions. C. To limit the amount of benefits the insured can receive based on income level. D. To allow the insured to continue receiving full benefits if they return to work part-time. Answer A. To coordinate disability benefits with other income sources, such as Social Security or workers' compensation. Explanation: The integration of benefits provision ensures that the total benefits the policyholder receives from various sources do not exceed a predetermined amount, typically a percentage of their pre-disability income. It coordinates benefits from multiple sources, such as the insurer, Social Security, or workers' compensation, to prevent the insured from being overcompensated. Question 28. Which of the following is a potential consequence of failing to notify the insurance company promptly about a disability claim? A. The policyholder's premium rates may increase. B. The insurance company may reduce the amount of benefits paid. C. The claim may be denied if the delay affects the insurer's ability to assess the claim. D. The policyholder may be required to pay for the insurance company's legal fees. Answer C. The claim may be denied if the delay affects the insurer's ability to assess the claim. Explanation: Insurance companies often require prompt notification of a claim to begin the assessment process. If a policyholder fails to notify the insurer in a timely manner, the claim may be denied or the benefit amount reduced if the delay impacts the insurer's ability to evaluate the claim properly. Timely reporting is a key component of ensuring that claims are processed efficiently and correctly. Question 29. Which of the following statements is true regarding the waiting period in disability insurance policies? A. The waiting period is the time an insured must wait before receiving benefits after becoming disabled. B. The waiting period is the time an insured has to wait before applying for benefits. C. The waiting period is the same length for all disability insurance policies, typically lasting 6 months. D. The waiting period starts after benefits are paid to the insured. Answer A. The waiting period is the time an insured must wait before receiving benefits after becoming disabled. Explanation: The waiting period, also called the elimination period, is the time between the onset of a disability and the start of benefit payments. During this period, the insured does not receive benefits but may use other income sources such as savings or paid leave. The length of the waiting period can vary, typically ranging from 30 to 180 days depending on the policy. Question 30. Which of the following best describes the concept of lone occupation in the context of disability insurance? A. A policyholder is considered disabled only if they cannot work in any occupation. B. A policyholder is considered disabled if they cannot work in their specific occupation, regardless of other job opportunities. C. A policyholder is considered disabled only if they are unable to perform any of their job duties. D. A policyholder is not considered disabled unless they have a permanent, irreversible disability. Answer: B. A policyholder is considered disabled if they cannot work in their specific occupation, regardless of other job opportunities. Explanation: the lone occupation definition of disability provides benefits to the insured if they are unable to perform the duties of their specific occupation, even if they are able to work in another job. This is a more favorable definition for policyholders than the any occupation definition, which requires the insured to be unable to work in any job for which they are qualified.